In this video, we're going to look at my investing plan for this year, 2021, and I'm going to show you where I'm planning to invest most of my money. You will see the step-by-step process that helped me build my investing plan and how to allocate my assets. At the beginning of the year, I access my financial condition and set my financial goals. It helps me know where I stand financially and where I want to go. My investing plan for this year, 2021, is the road that keeps me on track to achieve my financial goals. It helps me to determine my risk tolerance, time horizon, decide what to invest in, how to allocate my money, and monitor my progress. If you want to see my investing plan and how I build it, watch this video till the end and don't forget to subscribe to my channel and give a thumbs up. My investing plan for this year follows the 100 rule. The 100 rule is a stock allocation rule of thumb used in financial planning. It states that you should subtract your age from 100, and the result is the percentage of your portfolio that you should be invested in stocks. For example, a 25-year-old would have 75% of his investments in stocks and the rest, 25%, in relatively safer investments like cash, money market, real estate property, savings accounts, and government bonds. The 100 rule has helped investors to simplify their asset allocation. It is important to remember that this stock allocation rule is a starting point for making investment decisions, and investors need to take their other factors into consideration. Some of the most important factors that I took into consideration to build my investing plan were the inflation, rate of return of my investment, and retirement age. We have to remember that thanks to better healthcare and an improved knowledge of nutrition and a healthy lifestyle, people are living longer. For that reason, applying the 100 rule without taking other factors into consideration could put investors in jeopardy of running low on funds during their retirement. That's why many financial advisors suggest that you should adjust the 100 rule to 120. The 120 rule is considered by many investors to be much more accurate than the 100 rule because it helps you to balance your asset allocation with your future goals and needs. With that being said, let's go to my investing plan for this year. As I said, when I created my investing plan, I used the 120 rule instead of the 100 rule, and I also included other important factors in consideration at the time of building my portfolio and assets allocation. I included my financial goals, my full retirement age or time horizon, risk tolerance, emergency fund, investment return, investment vehicles, the pandemic, inflation, systematic risk, and unsystematic risk. Remember that systematic risk is the risk inherent in the macroeconomics, while the unsystematic risk is the risk that is inherent in a single stock or sector. That's why you don't put all your eggs in just one basket. I diversified my portfolio by investing in different sectors and buying different financial investments such as index funds, ETFs, common stocks, gold, and currencies. Before continuing with my asset allocation, let's talk about my financial goals, and also don't forget to give this video a like for the YouTube algorithm. After assessing my present financial situation, my second step to creating my investment plan for this year was to set my short-term and long-term investment goals. My short-term investment goal is to grow my capital between 10 to 12% for the year, while my long-term investment goal is to grow my capital 10 to 12% annually until reaching my full retirement age of 67. Even though I will never want to retire from my inventing career, I build my investing plan because it helps me to stick to my rule, and it helps me to prevent that emotion hijacking my rational decision-making process when facing market volatility. As we know, investors tend to become impulsive and overreact during market corrections or financial crisis. Having a plan is essential to know what to do when facing those difficult moments in the market. So here's my asset allocations, taking into consideration the 120 rule and the other important factors already mentioned in my investing plan. To create my investing plan, I subtracted the 120 rule minus 30, which is my age, and that gives me 90%. This means I should invest 90% of my portfolio in stocks and the rest, 10%, in safer investments according to the rule. And the rest, 10%, in safer investments according to the rule. But I tweaked the rule and I just invested 85% of my portfolio in stocks, index funds, ETFs, exchange-traded funds, gold, and currency, and the rest is kept in safer investments as shown below. My portfolio is allocated as follows. 30% is allocated in index funds and ETFs with an expected annual rate of return of 8 to 10%. Remember that investing in index funds with a long-term investment horizon can allow your portfolio to recover from any market crisis. 8% is allocated in gold through a gold exchange traded fund, GLD, to protect my portfolio from the inflation and market crisis with an expected annual rate of return of 4%. 37% is allocated in stocks to grow my capital with an expected annual rate of return of 10%, a little more or a little less. And 10% is allocated in a currency exchange market to grow my capital with an expected annual rate of return of 6%. The rest, 15% of my portfolio, is allocated into a relatively safer investment such as high-yield savings accounts for an emergency fund and one-year CDs to earn a little bit more than savings accounts. Finally, I want to remark that I created my investing plan by accessing my financial condition and setting my financial goals. Furthermore, I built a moderately aggressive portfolio to allocate my access with the help of the 120 rule and taking into consideration other important factors such as risk tolerance, retirement age, time horizon, inflation, the pandemic, the systematic risk, and the unsystematic risk. So this is it for today's video. Share your thoughts with me in the comment section below. If you enjoyed the video, hit the like button for the YouTube algorithm, and please don't forget to subscribe to my channel and hit the bell icon so you never miss an update. Thanks for checking in. See you in the next video. Until then, stay safe.